So you can WhatsApp us or call us directly. Both the numbers are flashing on your screens right now, viewers. And on the show, we are joined by Manish Chaudhary of Stocksbox on the fundamentals and Vikas Jain of Reliance Securities on the technicals. Welcome to the show, gentlemen.
Thank you.
Good evening.
Good evening. Now, let's go across to the first query of the show. So, Navendu Sharma is writing to us from Patna. He says that he's bought 1,100 shares of Godrej Agrovet, bought over 3 years ago, and around 450 a piece. So, should he partially book his profits or exit completely, or he can still hold it for another 2 years? If there's a reasonable prospect of appreciation from the current levels. So currently the stock is trading, and he is sitting on a very handsome profit of almost 3 lakh rupees. There's what I can see. He bought it at 450. Currently it's trading at 715, and the stock was also up nearly 1% today. So Mahesh, coming to you, since he has asked for a long-term view, Manish, I'm sorry, what do you have to say on the company?
I think the company is into the agri space, and I feel that space after almost 4 to 5 quarters of a very tepid performance, I think the performance in the overall agri space are showing some signs of improvement. So I think Godrej Agro is a good bet, but my suggestion would be, since the viewer is sitting on handsome profit, I would advise to book at least 50% of the profit and rest hold it for at least 2 years to have a more handsome gains. I expect this stock to move closer towards the 1,000 trajectory in the next 1 to 1.5 years. So I feel he should book some profit and keep the hold from a longer term perspective.
Manish, do you also have any other suggestions apart from the company in the similar space?
I think in this similar space, I feel that UPL offers a good risk reward at the current price. I feel most of the negatives of the business are already priced in. So he can move the part of the profit towards UPL, which also operates in this similar space.
And Vikas, coming to you, what do you have to say on this particular company for the short term?
So if you look at Godrej Agrovet has been given good returns over the last 1.5 years. And the way the markets have bleeded in the terms of mid caps and the small cap side, the stock has showed its outperformance compared to the broader markets. So we believe the stock should move higher further near to 830, 850, the levels which it tested in the last year. So we should continue to hold on and be in a good brand name from the company, and with the agriculture in focus during the budget, I believe we should continue to hold on and move higher near to 830, 850 levels.
So that's a hold on Godrej Agro. Now we'll go on to our next WhatsApp query. Gul has written to us from Kerala. He holds 5 shares of Larsen & Toubro, and he's asking if it is advisable to buy more at the current price. Also, because the earnings of the company just released today, he's also asked your views on this gentleman, and a couple of things about the earnings today, right? So profit and revenue were up 14% and 17% respectively. However, they bet estimates. And plus, an interesting factor about the earnings report card was the fact that international orders comprise approximately 53% of the total mix. So, given all of this, what would your recommendation to Gul be? Should he hold on to his 5 shares of L&T? And I'll ask this question to you first, Manish.
I think L&T is a proxy play on the overall economic growth of India, and considering that the budget is around the corner, so I think it is a best play on the budget as well as from a 1-year perspective as well. As you rightly said, the numbers have come just in and the numbers have been decent enough. The highlight of the numbers was the kind of order book. If I'm not wrong, the order book has reached close to a lakh crore. So from here, execution would be a key thing. And I think L&T being the kind of blue chip it is, I think execution should not be an issue with this company. So if someone is willing to hold it from a 1-year perspective, I feel the counter offers a very good risk reward. And also it is a budget play wherein I expect the capex to at least move 8 to 10% higher from the FY25 capex.
All right, all right. Are you taking for a short-term
take
view? All right. Okay, so with that, let's go across to a caller who's calling us from Chennai. Hi, Kumar. Good evening.
Good evening. How are you?
We are very good. How can we help you?
I'm recently got Axis Bank at 1,000 MMTC shares. What will be the range? Will it be bouncing back?
And when did you buy it exactly, Kumar?
2 weeks back.
2 weeks back. And why Axis Bank? In the entire banking space, why did you choose Axis Bank only?
No, in terms of it has corrected a lot, so I felt that it has got some support.
Yeah, because I can see that you are currently sitting on a loss of almost 10,000 there. And in the past 6 months, the stock has performed significantly low. It has, sharply declined. So, and are you looking for a short-term view or a long-term view?
Short term only. Will it be bouncing back in 2-3 months?
All right. Okay, Vikas, coming straight to you, how is Axis Bank faring on the charts? Is it advisable for him to stay, invested in this company for another 3 to 6 months?
Yeah, he should continue to stay invested in another 3 to 6 months, because if you look at the structure, the stock has completed its price-wise and time-wise both direction from the highs of around 1130, 1180 odd levels. It has made a significant bottom near to those 920, 930. A higher bottom structure is in place with holding its 200-week average as a strong support. Some recoup of losses have been done over the past few days, and the way Band Nifty has been shaping up for a breakout, we believe Axis Bank would continue to outperform. So 1080, 1100 should be the probable price over the next 2 to 3 months, which should recoup his purchase price and even turn into profit. So he should continue to hold.
Okay, so it's a hold on Axis Bank, and let's go across to our next caller. Amit is calling us from Hyderabad. Hi, Amit. Good evening.
Good evening, ma'am. My query is regarding a stock known as Pricol. I bought it just when the COVID had hit at 100 shares at 50 each. And now, given the whole space of EV and big focus on electrical vehicles, this budget, do you think, and this company is in automotive instruments and they are EV ready, do you think it makes sense to hold it for long term?
Okay, I got your question. But before I take this question to our guest, I'd like to understand what made you select Pricol to invest in it?
Ma'am, I was, reading through these automotive instruments and EV, the next big thing at that point of time, and COVID had hit, so I bought two companies at a very cheap price. One was Gogoldas Export, about 74 rupees, and Pricol at about $50. That was my starting investment journey after I bought SBI and ITC. So, I was reading and thought it's a next big thing. Why not just invest a little and see?
Wow, very well. I'll take this question to Manish, our fundamental expert. Manish, Amit holds 100 shares of Pricol at 50 rupees a piece. A pretty attractive price to buy. He bought them during COVID and the stock is currently trading around 496 levels. So he's sitting on a profit of approximately 45,000 by now. However, the stock hasn't done pretty well in the last, 1 month since the start of this month in January. What do you think about this particular stock going ahead? Because he is interested in holding on to the stocks from a long-term perspective, and also about the space.
I think the stock operates in the auto ancillary space, and it makes the instrumentation clusters, especially for the EVs and also for the other OEMs as well. So I think since COVID, we have seen the EVs, the overall EV space going through the roof. And the content per vehicle has also been increasing in the last 2 to 3 years. And I think Pricol has been one of the key beneficiary of this overall move. Also, if I look at the return ratios of the company, the profitability and the kind of institutional holding which the stock has, I feel it's a good long-term bet. But considering that the viewer is already in handsome profits, my advice will be to book at least 50 to 60% of his investment into Pricol and move that money into an OEM space, not into an auto ancillary and in an OEM space, and I feel M&M looks very good at this point in time.
And because Manish is suggesting to book profits on Pricol and also buy an alternative like M&M, do you echo that view? And before that, I'd also like to address the earnings of this particular company. The net profit was up 21%, revenue was up 10%, and EBITDA was also up 10%. So recently, the company has done well. What is your view technically?
If you look at the structure remains positive, but as we witness, the volumes have been pretty low into the stock. So I would agree with Manish view. He should book some profits, 50% to the tune of it, take home some money and invest the proceeds into some other, because if the auto EMs as suggested, maybe along with Mahindra and Mahindra, I would add to Tata Motors as the stock has declined by 10% in today's trade, which gives a good opportunity to hold this name. The company has declared that by October 2025, the company would go approve the demerger and go for the demerger process. So the re-rating of the valuation would happen. And Tata Motors itself has declined by more than 30-35% from its peak. So it offers good value to reinvest the proceeds and selling into Tata Motors or Mahindra as per the client's comfort.
All right, so book profits and buy Tata Motors or M&M instead. Is that the view? That's the view coming in from Vikas on the technicals. Now we have a caller from New Delhi. Hi Nitun, good evening.
Hi, how are you doing?
I am doing very well. How can we help you?
Got a query on Juniper Hotels. I jumped into it at the rate of 485, purchased around 3,500 odd shares.
Yeah.
But unfortunately, their purchase has been downhill all the way.
Yes. And I'm seeing that you are sitting on a very big loss over there, almost 7.16 lakh. That is pretty big a number. So how can we help you? What exactly are you looking for?
I'm looking at, seeing it gone more down today to 285 levels. Should I try to leverage it more? Should I pump in more into this, or should I leave it as it is? And what is the expert's view on long-term and short-term holding? And do this is revival? Because the property these people hold are pretty good.
Yeah. Okay. I've understood your query, Nitun. Now, Vikas, coming to you. For the short term, currently the stock was down. In fact, today only it was down over 2%. And if I look at the last 6-month picture, it has been down over 34%. And Nitun is also sitting on a very big loss there. So what do you have to say on this particular company?
So in terms of Juniper Hotels, this stock is freshly listed since last 1.5 years. And he has bought at almost at the peak price. And since then, the stock has been continuously facing pressure. And if you look at the structure of the IPOs after the lock-in period gets over through the anchor investors, they possess sharp amount of selling and profit booking. So Juniper Hotel also is one of the case. But we believe it should continue to hold on at current levels. Instead of adding, he should wait for some more time correction or consolidation and wait for 1 or 2 quarter numbers. If some amount of fundamentals improve, then it would chip into the stock. On the higher side, we believe the stock can move higher near to 325, 330 for a bounce, because it has made a formidable bottom near to 260, 65 levels. So 325, 330 should be the bounce back zone for the Juniper Hotels.
And Manish, do you also hold the same view for the long term?
Yes, I agree that Juniper Hotels has not performed as the overall hotel industry has performed. I think the major reason has been the overall portfolio of Juniper Hotels has been on the asset-heavy side, vis-a-vis other hotel companies which are also moving towards the management contracts. The landscape for this sector still looks very good. The primary reason being the demand is more and the supply side is restricted. And also the kind of consumer spending, especially on the luxury segment, which we are seeing since COVID, I'm not seeing any signs of slowdown there. So I believe if the viewer should hold it for at least a year, I think the number should improve from here on. And this company caters to a well-known brand like Hayat, which I think should see some tractions in the earnings, at least from a 1-year perspective.
Understood. And now we have Rajesh calling us from Mysuru. Hi, Rajesh.
Hi, ma'am. Good evening, ma'am.
Good evening. Please go ahead with your question.
Ma'am, KPIT Technology 300 stock, average price 1370, ma'am.
Okay.
Hold or sell, ma'am, 3 months, ma'am.
Understood. Rajesh, when did you buy these shares of KPIT Tech? Did you hear my question? Okay, never mind. I'll take this question to Manish. Manish, Rajesh holds 300 shares of KPIT Technologies at 1,370 apiece, and the stock is currently trading around 1,434. Now, the company announced its results yesterday itself, and the net profit was down 8.2%, but the revenue was up 0.4%, and EBIT was also decent at 3.3%. Also, it has raised its guidance and is exploring stronger deal wins, and plus the stock has been performing pretty positively to the results. So do you think Rajesh is doing a good job at holding on to his 300 shares of KPIT Tech?
I think, yes, you have rightly pointed out that the results were kind of okayish, but I think the guidance for the next year, FY26, and also for the Q4 FY25 has given some hope that the future earning trajectory is still intact. My overall sense for the overall IT sector is that I feel from here on, I think most of the negatives are priced in, and we can see that in the management commentary across the IT companies. I think there are green shoots of some visibility for earnings, especially on the BFSI sector, and that is also been shown in some other sectors like automobile, retail, and telecom as well in this quarter. So I believe that from a one-year perspective, I feel KPIT Tech is a definite hold for me. So the viewer should continue to hold it.
Right, so that's a hold on KPIT Tech. With that, we have a caller from Himachal Pradesh. Hi, Paramjeet. Good evening.
Good evening, ma'am.
Thanks for calling in. How can we help you?
I'm having 1,200 shares of RateGain.
Okay.
I want to know long-term as well as short-term view.
Okay, and when did you buy it?
Few days back.
Okay, okay. So it's a recent purchase because
Yes.
it's you bought it at 690. Currently, the stock is trading at 705, and it was up over 0.5% today. But if you look at the past, 6-month picture, as I can see in the charts, it peaked in November, and since that it has been down significantly. So Manish, coming to you, on it, how are the fundamentals of RateGain looking like, considering this massive, decline in the performance?
I think the fundamentals looks pretty decent for me, and it's a proxy play on the overall hospitality sector as it provides the software services for the hotel industry and the airline industry. I think the financials also, if you see, I think it's on an upward trend. But my sense is that it is better to play a direct play on the hospitality, which is the hotel sector, and also on the airline sector. I feel a proxy play is not a good choice vis-a-vis the direct play. So my suggestion would be to book profits here and move that money to something into like Indian Hotels on the hospitality side and Indigo Airlines on the airline side. So I think these two plays would be a better play rather than playing a proxy play to the overall theme.
So sell view coming in on RateGain for long term. And Vikas, what do you have to say on the same? How is it faring on the charts?
So the stock has witnessed some bounce over the last 2 days in line with the broader markets. So from 685, 690, it has moved up higher and made some amount of uptick. But multiple band of resistances continues near 730, 740 odd levels. So the stock has been good profits. I believe we should book some profits and wait for some amount of more corrective action to happen.
Okay, and now we have Sunil joining us on the phone line from Mumbai. Hi, Sunil.
Hi, good evening.
Good evening. Thank you for calling us. Please go ahead.
My query is I have purchased 100 shares of Zomato
Okay.
a week back. The day before the Q3 results were out.
Okay.
I purchased around 245.
Okay.
So now today I think it's some 219 or something.
Right.
So should I hold or should I invest more or should I sell off?
Okay. And are you looking for a long-term view or a short-term one?
No, short term.
A short-term perspective.
Maybe for 6 months or so.
Or 6 months or so. Okay. I'll take this question to Vikas. Vikas, Sunil has invested 100 shares of Zomato at 245 rupees a piece, and the stock is currently trading around 218. Now, a couple of factors about the stock is that it has fallen significantly around 300 levels recently and has been a high volatility stock. Do you think it's a good stock to be invested in?
Yeah, if you look at the structure, as the stock was been a high flyer, we have seen the stock has returns who have been very strong over the last 2.5 years. Post inclusion into the F&O, the stock faced some strong amount of volatility, and today in the January expiry, it was down by almost 30%. But some bottom up formation has been taken place near to 205, 210 levels, which is almost 38.2% retracement of the entire move. So a bounce back towards 235 to 240 is easily expected. So we can continue to hold on, but maybe exit at his purchase near to his purchase price, because again from those levels the stock would have moved higher near to those 20% from its recent bottom. So 235 to 40 is a good resistance area where he should sell.
Right, so that's a view coming in on Zomato. Now we have a caller from Bengaluru. Zenith is calling us. Hi Zenith, good evening.
Good evening, everybody.
Yes,
Hello.
How can we help you?
I'm holding ITC Hotels share 200. I just bought it, not from the demerge, at the rate of 163. I have a few quick questions, if you may allow. First being, why it's getting lower circuit every single day? Because being valuation looks fine. It is a zero debt company having a good 1,500 crore cash flow. And plus, it's going to get 700 plus growth every year from operations. It has a good guidance. So why it is getting lower circuit every day? And also, can I accumulate at this zone for a long term, maybe 2 to 3 years?
Yeah,
So
all right. Because it has recently listed as, I think, some amount of time needs to be given to the company to, come up with its performance. So Manish, coming to you, what do you have to say on ITC Hotels?
Yes, I think the viewer has got it right. The stock has been on the lowest circuit. I think the primary reason what I can sense is, since it has demerged from ITC, most of the institution, especially the mutual fund houses which were holding ITC in their different schemes, the mandate did not allow them to hold ITC hotels. So I think the selling from those kind of institutions, I think, is coming into ITC hotels at this point in time. As far as the fundamentals are concerned, I feel ITC is one of the most premier brand in the overall hotel industry. And with the kind of expansion plan it has, it plans to add around 25 hotels in the next 2 years, and around the overall hotel portfolio should reach by 200 hotels in the next 5 years. And if you look at the RevPAR and ARR, I think that is one of the best in the industry. So I feel on the fundamental side, there is nothing to worry about. And if someone wants to add, I would suggest to let this selling subside and then consider adding ITC hotels.
Okay. And we have Chandrasekhar now joining us on the phone line from Andhra Pradesh. Hi, Chandrasekhar. Good evening.
Hello, good evening, ma'am.
Good evening. Please go ahead with your question.
Yeah, I have Enviro Infra Engineers Limited shares of 100 shares.
Okay.
So, what is the long-term view for that one?
Understood.
So, I want to add some more shares.
Okay.
Is it right time to accumulate, or shall I wait?
So, Chandrasekhar, because you said I want to accumulate more shares of this company, why are you interested in Enviro Infra?
Yeah, it is working in the waste water treatment, and it is providing end-to-end solutions for waste management companies like that.
Okay, well read.
So it has good future.
Understood. I'll take this question to Manish. Manish, Chandrasekhar holds 100 shares of Enviro Infra at 231 apiece, and The stock is currently trading around 250 levels. But it debuted on the stock exchanges very recently, around November 29th, if I'm not wrong. And he also rightly mentioned the space that the company is involved in. Given all these factors, because the stock was down and has been trading with a downward bias recently, what's your view from a long-term perspective?
I think if I consider the overall space of wastewater management and the water management, I think the kind of government trust which we are seeing in the last few years, I feel all the players in the industry are poised to benefit from this over a longer term horizon. Yes, the stock has been recently listed and it has corrected significantly from the top, but I think from a fundamental perspective, the earnings trajectory has improved, and the kind of order book which the company has, I think the execution from here on would be key for the stock performance. And most of the order book, I feel, comes from the government and the municipal corporations. So I feel the working capital cycle is the only risk I can see here on. But yes, the kind of order book and the kind of execution it has, I think from a longer term perspective, it's a hold for me.
That's a whole view coming in on the company. Now we'll have to slip into a short break. Keep sending in your queries on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit. This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT definitely needs to change.
Old tax regime. The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections. Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley. Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT definitely needs to change because now if returns are not that good, it'll start pinching people.
Income tax. I think income tax because that's what matters to me.
Old tax regime. Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra. Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40% to 30%. In 2001, I think, if I'm not wrong, Yashwant Sinha, who reduced all the duties on customs that led to the computer age or the IT age taking off in India.
I think the budget in 2022 where capex was done in a very big fashion.
There were several actually. 1991 was something that stands out, and I mean the rest is history.
As I said earlier, Manmohan Singh's 1991 budget, I was a very young child at that point in time, but as far as...
Welcome back. You're watching Ask Profit on NDTV Profit. We are joined by Manish on the fundamentals and Vikas on the technicals. Viewers, just a quick reminder that this is your chance to get all your stock-related queries answered. So please don't forget to call us on the numbers that are flashing on your screens right now. With that, we have a caller from Indore. Hi, Shamji. Good evening. Shamji, am I audible? Yes.
Yeah.
Please go ahead with your query.
I would like to ask about MMTC. I bought at 98 rupees. I have 1,000 shares in my hand.
Okay.
And I wanted to know about should I sell, hold, or average out? What should I do?
Yes. And when did you buy it exactly?
In August, I think so.
In August, okay, because I can 24. See, okay, because during those time only in August only it peaked and it reached the level of 120, which was its highest, and since then it has seen a downward trend. So, Manish, coming to you, do you see the stock correcting and reaching those levels anytime soon? Because currently the stock is trading at, if we can pull up the charts, we can see at what levels the stock is currently trading at. It's currently trading at 67 and he bought it at 98.
I think my fundamental take on this company is that I think since the last so many years, if I look at it, I think the kind of the financial performance which needs to come, I think that is still not visible in the earnings trajectory. What happens with this company is that it is trading into the entire gamut of things, right from fertilizers to metals to commodities, everything. So I think what happens is one business does well, the other does not do well. So the overall impact on the performance does not, we do not see that in the overall earnings trajectory. So my view is that from a longer term perspective, I think one should exit MMTC, and in the current times, I feel the private banking space, especially the larger private banking space, looks very good from a valuation perspective. And in that space, my top pick at this point in time is ICICI Bank. So I think book your losses in MMTC and move that money into ICICI Bank.
Okay, so book your losses from MMTC and buy ICICI Bank instead. That's the view coming in by Manish. Vikas, do you have to say anything on the short term?
The short term is influenced from the PSU basket, and the PSU whole sector in this set of companies got peaked out somewhere in July, August. Now it's been in the consolidation phase, so unless until the broader PSU markets, the PSU basket stock doesn't perform, it will be difficult for the stock to outperform. On the higher side, multiple band of resistances have been placed at 71, 73. So if that has been crossed, then the stock will move higher near to 80, 85 forward levels.
Okay, got it. Now we have Shiv joining us on the phone line from Bangalore. Hi, Shiv.
Madam, namaste.
Namaste. Please go ahead with your question.
Madam, I have a Zen Technology.
Okay.
Around 100 share at the rate of 2080.
Okay.
Just 1 week back I bought it.
Understood.
What should I do? Should I wait or should I exit?
Okay, and why did you purchase these shares just 1 week ago?
Madam, it was doing good actually, drone sector. And second thing, result is going to expect it. Q3 result still it has not been announced. And third thing is in budget.
Okay, got it.
So that is the reason I bought it.
Okay.
And let me know what exactly can be done.
Understood. And when you say short term, how short are we looking at? 10 days, 1 month? What is it?
No problem. I may wait another 3 months also. Not
3 months also. Okay. Because I'll ask this question to you. He has 100 shares of Zentech at 2,080 a piece. He purchased them just 1 week back. And if you look at the charts, if you zoom out and look at the 1-year charts, the stock has been consistently falling from its 52-week high, which was about, say, 2,400 levels. Now, he rightly mentioned that the drone sector and defense and security space that the company is involved in could be in focus given how the budget is around the corner, and it might also concentrate on the defense space. What is your perspective on the stock performing on the charts from a short-term view?
So let's break it down into the immediate 1-year basis. The stock has outperformed and even declined sharply over the last 1 month. But the stock has consistently, if I take it a 10-year view, it has turned from micro cap to small cap to mid cap. And the stock has, the purchase price has been pretty high compared to the price what he's been holding on. But as he's been holding on with multiple views with respect to budget, with respect to defense, I think he should give 2 more days to the stock. If the stock doesn't perform over the next 2 days, he could exit, or he can keep a strict stop of around 1620 onto the name. Because if 1620 is being breached, then the stock can further decline here to 1250 to 1300, which should be another 20% downtick from current levels.
Okay, so that's a view coming in on Zentech by Vikas. Now we have a caller from Andhra Pradesh. Hi Zabir, good evening. Thanks for calling in.
Good evening, ma'am.
How can we help you?
I'm holding Tanla Platforms.
Okay.
At 902 rupees. I'm holding 50 shares. Should I hold or...
And when did you buy it exactly?
2 months back.
Yeah, because I can see in just 2 months you are sitting on a loss of around 18,000 there. And you bought it at 902. Currently it's trading at 543. And talking about its Q3 numbers, net profit was down 9%, revenue was also down 0.03%, EBIT was down 8.6%. So these are not some good numbers there. So Vikas, coming to you, how do you see Tanla Platforms performance on the charts?
So the performance remains weak. It's also the same repeat what it is one of the high flyer stocks, where the stock got multiplied by 7-8 times in very short span, and then the corrective action has been started. Now it is at the critical support. Post results, good amount of volume has been picked up into the stock, but I believe it should exit the stock and we look into some other else, because if this 520 has been broken, then we could expect further corrective action.
Vikas, do you have any suggestions there?
In terms of it, as the stock has witnessed good amount of from the same, but the platform-based companies would continue to remain under pressure. Okay. But we believe the insurance space would continue to remain in focus. And LIC looks promising at current levels because it has completed a 61.8% retracement of the entire move. And some positive news flow in terms of the overall insurance space, the stock should move higher further to 960, 980. So LIC looks promising from current levels.
Okay. Now we have Neeraj calling us on the phone line from Mumbai. Hi Neeraj, good evening.
Yeah, hi, good evening, ma'am. I bought today 1030, the Max Healthcare of 100 shares.
Okay.
And I am planning to add on more 1,000 shares.
Okay.
If my price increase by 15%.
If your price increases by 15%, then you want to add more shares. Okay.
Yeah, more shares.
And did I hear you correct? Did you buy these shares today?
Today, yeah, 1030 shares, 100 units I buy.
Okay.
So I was thinking that the price was previously it was some 1200. So I'm expecting if it reaches the same 15% more, so I can add on 10 lakh rupees or 20 lakh rupees for a 6-month frame. Whether it be possible, 2 quarters.
I got your question. I'll take this question to Vikas. Vikas, Neeraj holds 100 shares of Max Healthcare at 1030 a piece, and he purchased them today. Now, if you look at the chart, the company was trading 2%, almost 2% higher today, and in the last 1 month has been 10% less. Plus, it recently also reported its quarterly earnings and has reported a net profit of 238 odd crores, which is 17% down from its last quarter. Now, given its performance, would you consider it moving to its previous levels, which is 1200 levels that Neeraj is aiming at to buy more shares of the company?
So I didn't understood the query of the investor that buying 15% higher doesn't make no sense. So if he's bullish on the stock, he should buy at the current levels. So in the terms of Max Healthcare, it has been a continuously compounder. The stock has witnessed good amount of up move from the range of around 300-400 levels to almost 1200 levels over the last 1.5 year, 18 to 24-month period. And it has been consistently outperformed. It would continue to outperform and move higher near to 1200 levels. But again, buying 15% higher and making it a purchase price. So either if the stock declines near to 960, 980, post result reaction comes through the next few days, that would be a good opportunity to add.
All right. So that's a view coming in on Max Health. Now we have a caller from Hyderabad. Hi, Anand. Good evening.
Good evening, madam.
How can we help you, Anand?
Very good, madam. Very good, madam.
How can we? Yeah. Please go ahead with your query.
Yes, madam. I have bought 200 shares of Biocon.
Okay.
At the rate of 300, around 300 in 2022.
Okay. So you've been holding the stock for a very long time?
Yes, madam. Can I sell the stock at this rate, or add the stock, or hold the stock?
All right, because you are sitting on a profit of 11,000, there's what I can see. Currently, the stock is trading at 357. And in the last 1 year, it has seen an uptick, in terms of the performance. But I'd like our experts' views on the same as well. Vikas, since he's planning to hold it, although, he just wants to either exit or to hold for another, let's say 5 to 6 months or 1 year. So what do you have to say on this particular company?
So we can continue to hold on. The structure continues to look pretty promising. No doubt the pharma sector has witnessed good corrective action into January month, where the pharma index has declined by 10%. And in the case of Biocon has also declined from the highs of 385, 400 or to 357. But he should hold on. We believe the stock would again bounce back. Results are due later in the part of the week. And on the higher side, 385, 390 would be the potential targets for the next 2 to 3 months where he could exit.
Right, because the results are about to come, in fact, today only. So let's see, what's its Q3 results like. But Manish, coming to you, how are the fundamentals of Biocon looking like for a long-term perspective?
I think if I talk about the fundamentals, that does not look too good as compared to the other pharma players in this space. But yes, Biocon operates in a very niche segment, wherein the major therapeutic segment which it operates into oncology and all. So the product life cycle takes time to come on board. And I feel since the kind of earnings trajectory has not been so good in the last 2 to 3 years, I think most of the pipeline of products is due in the next 1 to 2 years. So from here on, I think the earnings trajectory should improve. So if someone is willing to hold it from a longer term perspective, yes, Biocon could be a hold.
Got it. So it's a hold on Biocon. Now we have another caller, Narendra, calling us from Mumbai. Hi, Narendra. Good evening.
Good evening, ma'am. I have ABB 10 shares at 6639.
Okay.
I purchased this recently in this month, 10-15 days back.
Okay.
Since I got to know that the Q3 results for ABB India is not favorable, I am just skeptical about I should hold it for a long time or just sell it.
Okay.
Please let me know.
Okay. So a couple of things that I'd like to know from you. When did you purchase these 10 shares?
10-15 days back.
Okay. So quite a recent purchase. And why ABB India?
ABB India, actually, it was recommended by my friend, and I also seen the fundamentals. The company is very strong, and it was faring well that time.
Okay, got it. So, and you want a short-term perspective on this one or a long-term one?
Long-term.
A long-term perspective. Okay. So, to answer your question, I'll take this one to Manish. Manish, Narendra holds 10 shares of ABB India at 6,629 apiece, which is, of course, way lower than the price at which the stock is currently trading on the stock exchanges. Plus, the way it plunged today, it has hit like a 10-month low, especially because it does not expect a lot of orders from India region. What is your outlook on the stock from a long-term perspective?
I think the overall power sector, if I want to talk about, has not seen the kind of traction in the last 2 to 3 quarters. And I think that is clearly visible on the earnings of various players which are involved in the overall value chain of the power sector. But my sense is that most of the bad times for the power sector in terms of the capex from the government is behind us. And from here on, I feel that there should be some traction from the government orders and also the orders from other players as well in the operating in the private space. So my sense is with the kind of parentage which ABB has and with the kind of return ratios and the kind of profitability it has shown in the past, I think if someone is willing to hold it from a longer term perspective, it's a definite hold also at this point in time.
Okay, so that's the view coming in on ABB. With that, we have a caller from Prayagraj. Hi, Sumit. Good evening.
Good evening, ma'am.
How can we help you? Yeah, we are good. How can we help you?
I'm here to ask about the shares. I do have shares of Adani Power, ma'am.
Right.
98 shares, ma'am.
Okay.
At the average price of 289.
Mm-hmm.
And ma'am, I have bought it in 2022.
All right.
And this stock has been shown the higher level of 850, but due to huge consolidation, ma'am, it has been declined to 500, ma'am. Right now, what to do?
Right, because it also posted its Q3 results, which were very good there. Net profit was up 7.4%, revenue was up 5.2%, EBITDA was also up 8.1%. So I'll get your view on it. But before that, I'd like to ask you, have you gone to, attended Mahakumbh? Have you taken that holy dip?
Yes, ma'am. Yes, ma'am. Surely I have attended that, but there is a great rush over there.
Oh, okay.
And huge popularity is gaining over there, ma'am.
Yeah, that's understandable. But, since we are not able to go there, and be a part of it, so you can actually pray on our behalf.
Sure, ma'am. Sure.
Yeah, so now let's go ahead with your query. Mahesh, coming to you, is it advisable for Sumit to hold Adani Power for long term?
I feel so that Adani Power is one of the largest thermal power producing company in the private space, and also with the kind of earnings it has shown recently, and with the kind of projects which are due for commissioning in the next 1 to 2 years, I feel the earnings trajectory would definitely improve from here on. And the valuation also looks very juicy at this point in time. So I feel that from a longer term perspective, Adani Power is a hold for me.
That's a hold view coming in on Adani Power. And just a disclaimer, NDTV Profit is a subsidiary of AMG Media Networks and Adani Group Company. With that, we have another caller. Praveen is calling us from Telangana. Hi, Praveen. Good evening.
Hi, good evening, madam.
Yes, how can we help you, Praveen?
I have a doubt on CDSL equity share, madam.
Okay.
I bought 10 share at the 1519.
Mm-hmm.
It went to 1989. So all-time high. It went to all-time high.
Yeah.
Now it will come 1270.
Yeah.
So yesterday I averaged with 20 stocks.
Okay.
Okay. I have a period. My durability period is short term, like 3 months, 4 months, whatever it is.
All right.
But can I hold this stock or not?
Okay.
Can you please me?
All right. Absolutely. Vikas, coming straight to you. How is CDSL faring on the charts?
Yeah, it's been oversold because the stock has witnessed a good corrective action of 25-30% and a monopoly name into the digital infrastructure space in the types of business it has. And all the capital market related companies have witnessed some drawdown into the January month. But at this price, it looks attractive. Even it can add at these current levels and increase its allocation to the stock. Believe the stock can move higher near to 1480 to 1500 levels over the next 3 to 4 months.
And now we have Prakash calling us on the phone line from Chennai. Hi, Prakash.
Hi.
Please
madam.
Go ahead with your question.
Yeah, I would like to invest about 5% of my portfolio, which is about 1 lakh into logistics sector.
Okay.
So I was looking at I was looking at a couple of stocks, Gateway District Parks or TCI Express, to do the investment. So I want to choose. I want help to choose between these two. I also thought about investing in Concur, but I think the upside is pretty much limited there. It has not fallen much, but these two stocks, other two stocks have fallen much. So I just wanted to know which one is better for investment.
Okay, and why are you interested in the logistics space?
So that is one sector which I don't have in my portfolio, and I see that because of the economic activity picking up, it might go up, is what my view is.
Definitely. I'll take this question to Manish. Manish, Prakash, as you may have listened to his query, he is interested in the logistics space and has identified two interesting stocks, Gateway District Parks and TCI Express. But given how, Trump is in power and supply chains could be disrupted because of high tariffs, do you think it is a good space to be invested in, even from the point of view of diversifying your portfolio?
I think logistics as a space should do well in the going ahead from a 4 to 5 year perspective, because I think the focus of government in India at least is on improving the efficiency and reducing the wastages which happen due to poor logistics in the country. So overall, the logistics space should do well from an industry perspective. As far as amongst the two stocks, I feel TCI Express is more better vis-a-vis Gateway. The reason being it operates across the logistics space, right from air to railways to roads. So I think that gives an advantage to diversify your risk across all the modes of transport. And also the company has shown a consistent profitability trend in the past, and the return ratios, if I talk about, is also decent with ROE and ROC hovering around 23 to 24%. So yes, from a longer term perspective, TCI Express looks good to add in the portfolio.
All right. With that, we have a caller from Mumbai. Hi, Ricky. Good evening.
Hi, good evening.
How can we help you, Ricky?
Yeah, actually, I bought Reliance Jio Financial Service 500 shares at the price of 225 last year.
Okay.
So I just want to know, can I double my holding at the current price, or should I wait for more fall?
And are you planning to hold it for a longer period?
5 years at least.
5 years. All right. So Manish, without wasting much time, coming straight to you, what's your outlook on Jio Financials for another 5 years?
I think Jio Financial has one of the best brains operating the company at this point in time. If you see the AMC business, the consumer lending business, the broking business, I think across all the domains, it has one of the best brains in the industry. The overall business is at a very nascent stage, and the valuation is also on the higher side. But yes, the trajectory for all the 3-4 businesses which it has under it is huge. And Reliance is always known for disruption in the industry in which it operates. So if someone has a 5-year kind of a horizon, I feel Jio Financial at around 200 to 20 is a very good price and can hold from a longer term perspective.
Okay. And now we have Balaji calling us from Chennai again. Hi Balaji, good evening. Please quickly go ahead with your question.
Yeah, so I own 500 shares of Refex Industries at average price of 23.
Okay.
So I was holding this share for around 3 years now.
Okay.
So I want to know whether it will grow further, or can I book a little bit of profit from this?
Got it. Congratulations on the amount of profit that you're sitting on. Manish, what's your view on Refex Industries?
I think congratulations to the viewer for making a very right entry into this stock. I think the best way forward would be to book some profits. And I feel the overall air conditioning gases space looks good to me. I think the prices have bottomed out. And recently you have seen that in the US, one company raised the refrigerant gas prices, and we saw that effect across the board in Indian companies operating in that space. So I feel the pricing pressure in the industry is behind us, and the volume should improve. So a combination of volume growth as well as price growth should bode well for the companies like Refex. But yes, with the kind of profit the viewer is hitting on, my advice would be to book at least 50% of that and move that into something where the valuations are comfortable, because the markets currently are very volatile. So it is better to park your money into something where there is a valuation comfort, and preferably on the large cap space.
All right. Now with that, we have a caller from Hyderabad. Chandra, hi, good evening. Quickly, please tell us what's your query.
Yes, hi. I have recently purchased Hindustan Aeronautics 120 in quantity at 4100 average.
Okay.
I have been trying to accumulate more. Is this the right time, or do I wait? And I don't have any problem to hold it for, let's say, the next 10 years also.
Okay, Manish, since we are running short of time, so quickly, if you could tell us whether, he should accumulate at these levels.
I think yes, definitely HAL is one of the best players in the defense sector. And I think if someone has a horizon of 10 years, HAL at these prices around 3,800 is a bargain buy for me, and should be bought at these levels.
Well, Manish and Vikas, thank you so much for joining us on the show and giving us your time. And viewers, that's all the time we had on this edition of Ask Profit. But do keep your queries coming in. We will pick up your calls as we get them on the show. So don't miss out on this chance as we answer your queries. And stay tuned to NDTV Profit for more news and updates.
STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets.
General elections.
Union budget.
Two more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure, because of the iconic 1991 budget speech.
STT definitely needs to change, because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax, because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh, that was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40% to 30%. In 2001, I think, if I'm not wrong, Yashwant Sinha, who reduced all the duties on customs that led to the computer age or the IT age taking off in India.
I think the budget in 2022, where capex was done in a very big fashion.
There were several actually. 1991 was something that stands out, and I mean, the rest is history.
As I said earlier, Manmohan Singh's 1991 budget, I was a very young child at that point in time. But as far as I understand from reading about it and watching a lot of commentary from experts about it, 1991 budget was truly a game changer.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
Nifty Sensex gained for the third day in a row. Sectoral indices traded mixed, with realty and oil and gas leading the gains, ending 1.5% higher. Chinese artificial intelligence platform DeepSeek to be hosted on Indian servers to address privacy concerns regarding cross-border data transfer, says Union Minister Ashwini Vaishnav. Government convenes a meeting of floor leaders of all political parties ahead of the budget session of Parliament. Government lists 16 bills for budget session. Insurance Regulatory and Development Authority directs insurers to not revise premium for senior citizens by more than 10% per annum. Asks insurers to consult IRDAI before withdrawal of individual health insurance products. Daily groceries to personal grooming products set to get dearer as packaged consumer goods makers plan to take another 2 to 4% increase in product prices. This is to offset the impact of inflationary pressures on margins. UP government introduces strict measures to prevent further incidents after the recent Mahakumbh Stampede tragedy. Declares the event a no-vehicle zone, cancels VVIP passes and one-way routes implemented. European Central Bank cuts deposit facility rate by 25 basis points to 2.75% in line with estimates. ECB President Christine Lagarde emphasizes banks' focus on controlling inflation, noting progress in disinflation. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will bring you the latest on markets as well as national and international news. To begin with, benchmarks have extended their winning streak to a third session driven by gains in financials and oil gas stocks. Meanwhile, media and IT dragged the index. Harsh is joining us with a wrap of all the action on the bourses today.
Well, it was a positive day, but rather a mixed day on D Street. And I say this because while the Nifty closed in the green, we had a choppy sort of a session of trade. We've closed around 1/3% higher on the Nifty. Let's pull up the intraday chart and you'll see what I'm referring to. We came off a couple of times in the day and thereafter we've done fairly well towards the fag end of the day. It was a range-bound kind of day as well, traded in roughly a 150 point odd band, but it was a tough day otherwise when you're looking at the way in which it's played out. Let's also look at the broader markets because the Nifty is one, but the broader markets is where a chunk of the pain has been over the last couple of days, and that doesn't seem to be in recovery mode. We did well in the morning, thereafter we gave up all of those gains, but we've settled in the green where the mid-cap index is concerned. The small cap though has closed in the red with a slight negative bias coming through. So you'll want to wait for some bit of recovery there as well. And that's why I call it a mixed day. Let's look at the heat map on the Nifty 50. And IT stocks were one big pain point. Outside of specific names, something like a Tata Motors on the back of earnings. Again, Trent and Infi, both of those were under pressure. Kotak Mahindra Bank with some senior exits was also 1% or so down. What did well though was the financials pack and the auto pack, which was especially buzzing in trade. Let's look at the contributors. Reliance will likely feature. You'll also have an HDFC Bank feature on that list, very, very likely. There you go. So some of the chunky ones contributing well to the Nifty's gains today. Let's also look at sectors. Within the sectors, you'll see the IT index languishing at the bottom. But outside of that, metals largely flat, PSU banks also largely flat. The Nifty Auto was down around 0.5% thereabouts because Tata Motors pushed it lower. And what did decently well was the Nifty Realty Index as well as Nifty Pharma, which was up 1.2 odd %. Thereafter, pretty much all indices in line with the Nifty. The BSE top 500 gainers, losers list, those are some names, a lot of them buzzing on the back of earnings as well as commentary. ABB also, visibility on the order book not looking good.
Thank you for wrapping the market for us, Harsh. Now, Manish Dangi, the CEO at Mosaic Asset Management, believes that the current market slowdown will drag for the next 1.5 years. He attributes this forecast to weak corporate results from the past 2 quarters, which may prolong for at least the next 5 to 7 quarters. Listen in to his remark.
We are in the midst of a cyclical slowdown in the economy, and it's totally expected that relative to bullish expectations, majority of things would be disappointing you. And there is a clear, about 5-7 months back, we were discussing about, potential slowdown in economy. That was a speculation, but it's very evident anywhere and everywhere you see in India and in its economy that, things are slowing. And that's reflecting in last 2 quarters results. This hope that, these slowdowns last very short for 1 or 2 quarters that I hear from many people is of course incorrect. Typically, 2 things happen. One, these slowdown tend to sort of drag on for 5-7 quarters at least, if not more, and they never recover without a solid assistance from policy stimulus. So either a major fiscal or monetary stimulus is brought in, or some kind of an external support comes into economy, and that is only when sort of pace of deceleration slows and eventually things begin to recover. So in a sense, the template of both slowdown and recovery is sort of fairly known and historical, and sort of recur again and again, and that is what I think should happen over the next 1.5 years as well.
Let's get you the fund flow picture of this evening now. Foreign institutional investors continue their selling spree for the 20th straight day. They offload shares worth 2,165 crore rupees, while domestic investors continue to buy for the 31st consecutive session and mop up Indian equities worth 4,582 crore rupees. Adani Enterprises has also announced its Q3 earnings, with the group's CFO Jogeshender Singh highlighting the group's progress in airport development. He mentioned that the group has achieved level 5 accreditation from the Airport Council of India and discussed further achievements. Listen in.
In Adani Airports business portfolio, during the quarter, Navi Mumbai Airport successfully conducted the first commercial flight validation testing. Mumbai Airport also achieved and became the 3rd airport in the world to have level 5 accreditation from Airport Council of India. AHL further added 14 new routes, 4 new airlines and 9 new flights during the quarter across its operational airports. On our commitment to ESG, we are pleased to inform you that during this quarter, AEL has secured a sector-leading score of 63 out of 100 in the S&P Global Corporate Sustainability Assessment for 24. This marks a significant improvement from a previous score of 49 in 2023. AEL has now been ranked among the top 5 companies globally in ESG performance out of the 180 sector peers.
Right. Larsen & Toubro reports its Q3 earnings. Profit grows 14% to 3,359 crore rupees, but still misses street estimates. It also recorded a 17% increase in revenue at 64,668 crore rupees. Infrastructure, energy and high-tech manufacturing remain in focus. The company holds an order inflow of 2.67 lakh crore rupees, which is 16% higher for the October-December period. Out of this, international orders continue 54% of the total mix at 1.44 lakh crore rupees. Now, in a significant relief for senior citizens, the Insurance Regulatory and Development Authority directs insurers to not revise premium for the elderly by more than 10% per annum. Pallavi is joining us. Pallavi, what else has the regulator told insurers to do?
Right. Like you said, most importantly, the notification says that insurers cannot revise premium rates for senior citizens by more than 10% per annum. Now, notification was released just a short while back, and it does make note of the steep rise in premium rates that we have been seeing for some health insurance products for senior citizens. What the IIT has also said is that insurers will have to consult the regulator if they do increase premium by more than 10%. They will also consult the regulator before withdrawal of insurance, individual health insurance products. The notification also directs insurers to take steps for empanelment of hospitals and for negotiating packages along the lines of the Pradhan Mantri Jan Arogya Yojana. Under the PMJY, hospitalization charges are negotiated centrally for package rates and are standardized across hospitals, and that sort of helps the government bring down the cost.
Got that, Pallavi. Thank you for bringing us those details. Now let's move on to an NDTV Profit exclusive. Have you ever heard of a finance company relying on money lenders? Well, that is allegedly what happened at Aviom India Housing Finance Limited, which is currently facing insolvency proceedings by the Reserve Bank of India. Sources tell NDTV Profit that Aviom India Housing allegedly depended on money lenders among a whole host of other fraudulent activities. And to explain the matter to us in much detail, Vishwanath Nair is joining us, who's my colleague.
So, Malika, what has happened here is essentially there's an investigation that the RBI had initiated a while back into Aviom India Housing, which has now resulted in insolvency proceedings against the company. Now, what has come out in this investigation is that the company had a loan book. It's a housing finance company, of course. It has a loan book of about 1,800 crore, which includes some fictitious accounts, loans extended to people who don't actually exist. Against these loans that the company has given out, they've also borrowed money from the market, about 1,400 crore worth of bank loans and close to 400 crore of NCDs that the company has borrowed. A whole host of lenders have loans extended to this one housing finance company. Now, what sources are telling us is that to repay bankers against these fictitious loans, the company had depended on money lenders borrowing money at high interest rates, about 40 to 50%. Which is what the scam or the fraudulent activities in this entire case is. Of course, there is an investigation, there is an audit process that is going on to determine the quantum of money that this company has borrowed from many money lenders. And once that is done, of course, then some kind of legal action might be taken against these people. But separately, an insolvency proceeding is ongoing that the Reserve Bank of India has already filed for. They've appointed an administrator. They've superseded the board of directors. And now there's a committee of 3 people who are advising this administrator on how to move ahead with the insolvency process.
Thank you for getting us those details. Now let's also take a look at some global market action. Wall Street opened slightly higher as investors digested recent quarterly results from a slew of mega-cap tech companies. This is after coming off a losing session post the Federal Reserve held steady on rates. The US economy grew at a slower than expected pace of 2.3% during the final 3 months of 2024. European markets were also trading higher, viewers, as the European Central Bank has reduced interest rates by 0.25% due to concerns about economic growth. This marks the 5th rate cut from the ECB since June. In her speech, ECB President Christine Lagarde emphasized the bank's focus on controlling inflation, noting progress in disinflation and a slowdown in wage growth.
The Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission.